where inadequate finance or capital is cited as a primary challenge to development of the SME sector on the continent, just how much of a problem is the sector facing in that regard?
It's a huge challenge, but it's also a huge opportunity. We believe that boosting access to credit for small and medium-sized businesses in Africa is vital to accelerating growth and job creation. And we believe so that credit is in particular important for small and medium-sized businesses in Africa for 3 reasons. The first reason is there are about 40 million businesses in Africa across the continent. The second reason is that 4 out of 5 businesses do not have access to credit, the credit they need to really build and grow their business and create jobs. And the last and the third reason is that world leaders have acknowledged the importance of small businesses in the recovery as well as for economic growth and specifically for Africa.
So where do the major barriers lie as you see it?
I think there are 3 main barriers. The first one is that banks need to learn how to profitably serve small and medium-sized businesses. The second one is that the enabling environment in many developing countries is not fit to support a lot of SME financing. So in particular, for example, it is difficult to take collateral in many countries. And the third reason is that also the capacity of small and medium-sized businesses needs in times improvements as well.
So in establishing a more coherent approach to promoting access to finance for SMEs across Africa, what are we starting to see evolve in terms of addressing this issue of financial inclusion?
Yeah, what we see and how we address this issue is that we work very closely with banks, with the private sector, as well as with governments to really design the strategies that are needed to overcome those challenges. So really to address the shortfalls in the enabling environment, to work with banks on building successful banking strategies for small businesses, and then to provide capacity building for small businesses themselves to be able to grow their businesses.
So when it comes to this approach of lending, let's take a look and pinpoint one example here, because in structuring loan terms, surely that's got to be one of the pivotal areas to consider. To what extent do we need to perhaps start seeing flexibility when it comes to something like loan terms, just so that we have something concrete to focus on here?
Well, let's take one example. So banks typically like to lend against collateral. And the type of collateral they typically like to take is real estate or immovable collateral. But there's a severe mismatch between the collateral the banks want to take and the collateral that businesses have. So if you look at a small business, then 70–80% of the assets that this business owns is not immovable collateral. It's movable collateral. It's the receivables, it's the stock that they have, and as well as machinery. So there's a huge mismatch. 80% of lending against immovable, but 80% of the assets is against movable. And so to change that, you need to change how collateral regimes are organized in countries, but then also work with banks so that they actually introduce products that lend against receivables or movable collateral.
So in line with providing concrete examples here, let's take a look at the role the IFC is playing and some of the measures or steps that you have taken in terms of guiding private sector and banks down this route.
Yeah, so the IFC has invested quite heavily in Africa. We've invested over $2 billion the last fiscal year alone, and the SME sector is one of our primary focus areas. So we have an Africa MSME program where we work with banks across the continent to develop SME lending operations and SME banking operations to profitably serve their clients.
Taking a look at sectors specifically, are there specific sectors that stand in the limelight and those that investors or financiers are typically shy away from?
Yeah, so we take an approach where we look at sector-specific interventions, because obviously they're quite critical to be able to tap into supply chains of large companies. And then we also look at broad market segments. So for example, we have a strong focus on women in business in Africa, which are untapped, underserved as well as we're looking specifically at SMEs that are in the agribusiness space, which obviously is quite important in Africa.
Of course, we've got banks that need to be justified in commercial terms, and when we talk risk financiers are taking on, it's not just the state of businesses that they have to consider. I mean, we've had the UN Commission outline a web of challenges: weak property rights, lack of enforcement of contracts, lack of bankruptcy laws, lack of reliable access to credit information. I mean, they're all working to increase the risk that's associated with business. So what needs to be done on that front to improve the risk-reward characteristic of businesses? And is that broader discussion happening simultaneously, creating an conducive business environment?
Yeah, I think it is happening right now. I think the G20 have put this on their agenda for the global dialogue. In our work in African countries, we clearly see that leaders are very much interested to advance and improve the enabling environment, because I think there's a growing conviction that small and medium-sized businesses are really the lifeblood of the economy, and currently they're very much constrained to really add to the fantastic growth story of Africa, and I think there's a tremendous potential that is yet to be unlocked.
If we flip the coin from a financier's point of view, I mean, what do SMEs need to be doing to be presenting their investment case so that it does look viable, to be pumping money their way?
Yeah, there's clearly a huge demand and a huge need also for businesses to improve their practices, and that is something that we are addressing as well. So we're working very closely with banks, business associations, to provide tools for small and medium-sized businesses to improve their practices. Online tools, training opportunities, so that indeed when they go to a bank, they can present a much better case.
So it goes also beyond just granting finance, because then this, one would assume, lends to the, ensuring that sustainability of the business is there and kind of guaranteed.
That's correct. That's correct. That's absolutely critical. And if you look at our partner banks that we work with, the SME toolkit, which provides a range of those financial, those training opportunities and information for businesses, is one of the key elements in the offering and the value proposition of the bank.